The outrageous and highly concerning holiday shopping debacle is upon us, and this year is set to be the worst year yet. Now, last year I sat here and explained how American consumers that were financing their holiday purchases would be unsustainable in the long run, and it showed cracks in the greater economy. Now I'm sitting here a year later and we are seeing those cracks come to fruition. What do I mean by that? Well, today we are going to talk about consumer debt, what stores are ringing alarm bells, and most importantly, how all of this impacts you. So let's get into it. First things first, Americans with holiday debt nearly doubles. What do I mean by that? Well, in a new survey, 46% of Americans said they still had holiday debt from last year. Let that sink in. Half of our country today is still paying off holiday debt from last year. Compared to last year, roughly only 1 in 4 Americans, or about 25%, were still paying off their holiday debts. That number doubled from 2 years ago to last year to this year. So what we are seeing is a significant climb in Americans who are not only choosing to finance their holiday purchases, but then are unable to pay off those debts. That leaves them with 2 options this year. Option 1 is that they're going to feel an obligation to continue to spend around the holidays. I understand it, a lot of us do, but that means they're going further into debt at a time when we know interest rates are not favorable. At the same time, the other option could be to spend less, something we are starting to see happen, and we know how important the holiday season is to the economy in America, whether it's part-time workers, seasonal workers, whether it's mom and pop stores that rely on the holiday spending to get through the rest of the year. We are going to see those numbers drop. Now, we are already seeing some of this happening just this week. Target sounds the alarm bell on holiday shopping. And I know there are other stores out there. Target is just one of them. But again, this is a perfect example of what we are starting to see, and I'll explain why. Target is experiencing a surprisingly weak holiday shopping season, a warning sign for the retail industry. Go figure. With holiday shopping season, it is pivotal for retailers. While Target can survive a weak season, many smaller companies depend on strong sales. Now, what this means is we could see more companies closing, of course, meaning more layoffs, which actually I'm going to talk about here in a minute. But first things first, why is this happening? Well, you and I both already know. Newsflash, no one can afford it. But of course, we hem and haw on these articles. People have cut back on discretionary goods in favor of groceries and everyday essentials. Don't you love the way that they phrase these articles? In favor of groceries and essentials, everyday essentials. What is an essential? You need it. It's essential. Groceries, you need food. Hello. Yeah, it's because no one can afford all of the bells and whistles like they could in the past. Then we have a quote here from the CEO that says, consumers tell us their budgets remain stretched and they're shopping carefully as they work to overcome the cumulative impact of multiple years of price inflation. Working to overcome the cumulative impact. You know what that really means? Prices have not come down. Prices are still high. No one can afford what they could afford a couple of years ago. Yeah, of course they're having to make tough decisions. So that is no shocker there. Then we also have this week, credit card debt hits a record $1.17 trillion. It's a red flag for budgets. Credit card debt has reached a milestone we shouldn't ignore, with Americans' outstanding balances swelling to $1.17 trillion in the third quarter. So again, what is this telling us? Debt is going up. I every day see these articles that say the consumer is strong, the consumer is strong, the consumer is drowning in debt. Yes, they are still spending, but people are now financing their groceries, their gas, their basic bills. People cannot afford everyday costs of living. And eventually this hole that we are digging as a country with debt is going to catch up to it. And I really think we're starting to see that now. And again, this $1.17 trillion of credit card debt does not even take into consideration mortgages, autos, student loans, everything else. But credit card alone has jumped over 8% year to year, 8%. So this holiday season is going to be a tough one for a lot of people out there. And I think, again, to me, this screams things are not looking good, which might be why we are seeing a record amount of insider sell-off. Yesterday, corporate insiders cash out in post-election U.S. stock market surge. Record numbers of U.S. executives are selling shares in their companies. Now, this could just be because we know the stock market is high, people are feeling good, they want to cash out, they want to make sure they take some profit, but it is interesting, the rate of insider sales has hit a record high for any quarter in 2 decades. 2 decades. So preceding the 2008 Great Financial Crisis was the last time we saw any kind of insider selling like what is going on right now. Now, another reason this might be, let's look at this quote, is generally with selling, in terms of predictiveness, insiders are early by about 2 to 3 quarters. As they start seeing froth in the market is when they try to generate liquidity more aggressively. Could it be that the stock market, which we know is highly concentrated right now, is overvalued? Could it be that maybe insiders see something that we don't? That would be my guess, but again, I don't know. That's just what I'm seeing here. Insiders sell off, it gives you pause, it gives anyone pause, especially given the backdrop of how many companies are laying off workers. If you go onto your internet right now and type in layoffs, you will see a stream of articles. Boeing this week set to lay off more than 2,000 workers amid plans to cut 10% of workforce. Marriott laying off over 800 employees. Salesforce layoffs. Everyone out there is cutting costs and cutting corners ahead of what usually is a robust season for many. But instead, we are seeing companies taking a very cautious route, which is shocking because, again, we are being told constantly that the economy is strong. And something just does not add up when you really look at it. Why are we seeing so many layoffs? Why are insiders selling? Why are retail sales down? Could it be because the American economy that is built on the American consumer is riddled with debt and is unable to keep up this pace of spending? Could that be it? That's what I think. When I look at all of the pieces of the puzzle put together, I don't think the outlook looks bright. Not to be a Grinch going into the holiday season. Of course, time will tell. But the early signs that we're seeing sitting here, I just don't think that this year is going to be gangbusters the way that they keep saying. And any spending that's going on, we know is spending tomorrow's dollars today. It is financed on debt that the American people cannot pay back because they're carrying it longer and longer, as evident in the fact that half of our country is still paying off last year. So for me, that is concerning. Now, I personally take all this information in, look at the big picture and think, okay, I don't think the economy is doing well. I want to make sure that I'm protected. The reason why I can sleep well at night is because I know I am protected outside of the system in physical gold and silver. I know many of you feel the exact same way. And if you are concerned about any of what's coming next, about the cracks in the system that we continue to see, and you want to take action to protect yourself, you can always call us at the number below or talk to one of our expert analysts by clicking the Calendly link below and setting up an appointment today. But I am sure that we are going to have a lot more information as the holiday season continues, and I will be tracking this closely. In the meantime, I just want to say, I know there's a lot of pressure out there, but everyone, the holidays are about being together with your loved ones and being thankful for what you have. So I'm thankful for all of you for being here as always. I appreciate you. My name is Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.